Hey guys, welcome back. Today I'm going to be going over a stock that may be undervalued, may be overvalued. Let's take a look. That stock is ticker MNDY, Monday.com, cloud-based work operating system powering workflow automation, project management, and collaboration for over 100,000 organizations from startups to Fortune 500 companies. It's a SaaS platform that enables users, even those without coding skills, to build and customize complex business solutions. Customers can pick tiered subscription plans for features and scale. Monday integrates with apps like Slack, Google Workspace, and Zoom, boosting team efficiency and transparency. Let's go over the Q2 earnings and some of the highlights. Revenue came in at $299 million, up 27% year over year, topping analyst forecasts. Enterprise momentum, record client acquisitions, especially those spending over $100,000 per year. Operating cash flow of $38.9 million, adjusted non-GAAP, up from a loss in the prior year. Free cash flow of $109.5 million. Strong sign of underlying profitability and scalability. Full year guidance, $1.22 or $1.23 billion in revenue, with 144 to 150 million in non-GAAP operating income. Taking a look at the valuation, Monday.com trades at a price to sales multiple of about 12 times, market cap of 14 billion. Asana trades at a 8 times sales, slower growth, lower profitability. Smartsheet 7 times, similar enterprise focus but lower margins. Monday's premium is supported by superior growth, 27% year over year, expanding margins, and rapid enterprise penetration. Wall Street is pretty bullish on this stock. Kind of going over some of the price targets. Current stock price of $215. KeyBank is overweight with a price target of $330 with a 35% to 50% upside. Piper Sandler buy $275 with a 25% upside. And pretty much everyone else, Goldman Sachs is at $270, 23% upside. Citigroup, $326 price target, strong buy, 48%. Jefferies, strong buy, $330, 50% upside. And the highest price target comes in at $450. That's 100% upside from here. So, and I don't have the name of who made that price target, but the lowest is from Bank of America, which is a hold at $205, which would be a negative 6% loss. So the risk to reward here is looking pretty good just based off of price targets, but this is not what we're going to solely do our research on. Just making it interesting, more interesting for me, because basically I don't know too much about Monday.com and haven't ever done any research, but this is kind of putting it on my radar. Risks and red flags. Premium valuation is justified only if growth and margins stay strong. So that's something we're going to have to watch. Earnings for Monday.com. Let's take a look when the next earnings are. Sorry, I gotta move something real quick. Oh, we don't have earnings till November. So November 17th is the next day for earnings. So we got quite a bit. But yeah, basically the premium valuation is only justified if growth and margins stay strong. Watch for competitive moves from Asana and Smartsheet and large cloud software providers. Look out for the bigger players. Large enterprise swings in volatility, especially if macro headwinds emerge. So if you're going to do research on a company like Monday.com, you're going to be looking at the competitors, how they're coming in with their earnings, if they're growing. It's going to be a big big key detail to take note of, especially if you see slowing growth in some of the similar companies. You can kind of tell if companies are cutting back on things like this. So many bugs. Oh my gosh. Monday.com, robust earnings, powerful enterprise momentum, premium valuation, make it a growth stock to watch in SaaS. Analyst targets suggest significant upside if the company stays on track, but always do your own due diligence. Premium multiples mean higher volatility. Would you pay a high premium for Monday.com's growth story? Or do rivals look more attractive since they're not priced as aggressively? Drop your take below, subscribe for more. Thanks for watching. Peace out.